All right, Mark. Okay. I have all the pre-screens done. Whenever you're ready, I've got to turn on audio and go to your screen. So you let me know when you're ready to do that. Okay. Audio's coming on right now.
I had the same opportunity to. Okay, thank you. So this is a sort of a strategy session tutorial for the Silver Bullet, the ICT Silver Bullet strategy that we trade here, that I trade pretty regularly. Just trying to take an opportunity to go through it a little bit slower and give people an opportunity to get in-depth answers to their question. I think I do pretty good in the stream, but I know I'm also trying to talk about other stuff and up on some tangents. So we're just going to focus on the setups and the criteria. Um, what's important, kind of in order of importance, what you need to see. And really, this is sort of just a confidence building session for you guys, because I want to just go through, just show you how many opportunities the market's going to give you to take these trades. It's a huge thing for me. When I sit down in the morning, I want to know that, any time I could see the setup, I could take the trade and do well. And it gives me a really positive attitude knowing that it's out there, and knowing that all I need to do is get the criteria, get the muscle memory, if you will, to be able to spot it and execute on it. And that just takes time in the charts, and that's what we're going to do today, is just go through the charts. um, let's start with yesterday, just because it was such a good day for the silver bullet. I mean, it was just ridiculous. And maybe flip through some other, go back through some other days and just randomly look. It's not like, a lot of times you might feel like people are cherry picking stuff on YouTube, and they're showing you things that they went to a specific day and found a specific day when everything worked. And so I like to just go back and start on a Monday and just kind of pour through the week, and Kraken does that with the DR stuff of his. It's really effective to kind of be transparent. And we're going to look at the losses, we're going to look at the wins, examine what maybe could have been done different to identify the losses ahead of time and not take them, by using higher time frame stuff, Fibonacci, things like that, the tools that we have just to increase our odds to take the trade. So just starting off, does anybody have any questions just overall about the silver bullet? We can just kind of get those out of the way first, and then we can go through and start looking at some setups. So is there anything you don't understand about it, as far as, like, I'm on the wrong time frame. Let me get on to the minute here. I show these criteria every day. Is there anything on here that you don't understand as far as what you're looking for? Acronyms, numbers, concepts. Actually, on the 2022 mentorship episode 9 minutes and 55 seconds, the video, he does a really good job of sort of through this information. And the first time I watched that video, I didn't catch it because I didn't know about the silver bullet at that time. And later he came out and said, if I could do it over again, and had one setup, then he started talking about this model repeats over and over every day. It's good for 5 handles most of the time. I heard him say that, and then I looked at it and saw just really clean and really simple. Didn't need to know what was happening, days in advance or what I expect after. It's you're here, you're right now, present price action. For the most part, you're looking at levels and stuff, but as far as your criteria, you don't need to know a whole lot outside of what's going on right here. So your focus is narrow. When you start, and then as you grow, you start adding more things to it, better understanding, things start moving a little slower, and that's progress.
So, Mark,
No,
is your intent on this today to basically break down the elements of the silver bullet?
from A to Z, pretty much. So we
Awesome.
start with a very simple thing, what you do when you get to your chart in the morning, and what you're looking at, and how it'll start developing, what you should be thinking about, and just kind of go from there. Do I have a fib open? Oh, I lost everything. Oh, come back. What's my green line here? Oh, okay. We'll leave that. That's fine. Good stuff to have on there. That's kind of what I mean too. Is as you add information and indicators, it's going to give you feedback on your expectations. That will help you get into trades and avoid taking trades based on that information. So this session will be recorded so we can review later. Yes, we have a professional streamer putting this stuff out to the whole world right now. We're live, satellite broadcasting everywhere. Bless your mama. It'll be in the recording section of the channel, the Discord, under education, right there. This is where everything that's recorded goes into this place right here. If you missed the TradingView tutorial, I just put it up yesterday, I think. So
Yeah, we have
I don't know how long it'll take him to do that.
we have Twitch streaming right now. We have Kick streaming right now. If you want the links, if you'll look under the chat uh, group, I have links to both of those, and then we'll have a local recording that Mark will be posting to his YouTube sometime in the next day or so.
All right, so I was gonna just go through real quick. Let's just replay yesterday. What would happen if we came to the charts? I like to get there 30 minutes early if I can. So this is 9 o'clock. Open is 9:30. Silver bullet hour, 10 to 11. And this is going to be your personal preference, okay? How you approach this. I'm going to tell you that these criteria, they're met. Doesn't matter what the time is. The criteria is the price action telling you what the market's doing. It can happen at silver bullet hour. It can happen right after the silver bullet hour. I missed a bunch of trades today because I went and ate lunch. I missed the best trades of the day because I left after the silver bullet hour. Myself, if I have the time and I can be here, I'm going to keep an eye on it. It's just if I don't have anything else going on, like I'm gonna do this hour. And for the stream, normally in the morning, I'll do the hour, and I might get off and just watch it myself. But I'm not trying to bog everybody down, all day in the stream. Split it up into a couple different things. But you got to figure out for yourself, and that comes through back testing. Right now you're probably hyper focused on these 2 hour windows, and you might not have the confidence to take the trade if you see it somewhere else. So what you need to do, you want to give yourself the best chance to, as many as possible that are going to be winning. I would go back and back test, and most of you have seen what the back testing effort looks like. I'm going to show you what's important and what kind of work needs to be done to give you the confidence to take these trades. So this is my silver bullet, one of them, my silver bullet back test. There's a lot of information here. A lot of this is compiled into individual categories now. Like a lot of these are just by default for me. So But at the time, I needed to know. I wanted to know: is there any edge? Is there any edge in any of these possibilities? If the market structure shift makes up two candles, three candles instead of one candle, love the big single candle that breaks structure and leaves a fair value gap. Well, what happens when I see two? That's a reason for hesitation. I wanted to eliminate that because if I didn't get what I'm used to seeing, I need to know what's the probabilities on whatever else can show up. I went through and did all that. Um, there's multiple fair value gaps, right? I wanted to know, get a bunch of twos. Do all my twos lose, right? Do I have a bunch of twos that lose, threes that lose? And end up, it's a small sample right here, and I have others that I went through different periods and had a little different criteria, but it was silver bullet in general. So sessions, I want to know, is one session stronger than the other? I want to know hours. I want to know the times. So I went through and took all the times. I found that when it appears, it doesn't really mean that if it didn't appear in that hour, that's any less probable. You might have to wait a little longer because it's a slower movement. But if the market's headed in that direction because you got your entry criteria, chances are that's where it's going. It just may lag a little. I find that happens to me in London sometimes. My trades drag out a little bit. I have to deal with more consolidation. That's just time distortion, you could say. ICT uses that phrase for consolidation sometimes. Oh yeah, as much information as you can get for yourself. Just trading the criteria is one thing, but if you want to have the confidence to take the trades, it's the other component. You can know what the criteria are, but when it comes time to buy, if you've got a bunch of questions in your mind about the session or the time or something about structure, you need to work all that out. Figure out what it is that you're not sure of. Go in and start on a Monday a couple months ago and go every time the silver bullet presents itself, it's your results. And then to me was this is what got me through that 500K, because I think I started that a little bit after this. I started in June. This is what propelled me to have the confidence to go through and motor right through that thing. I don't know what happens when I got funded, but I'll talk about that. Um, as far as passing the challenges and getting in and having great trades, I mean, this right here gave me this. Okay. You can see this starts June 8th. I started my challenge and I had already had all this under my belt. Right? This is what I knew. So when it came time to go in now and take the trades, the evals, this is all silver bullet, 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 silver. It's all silver bullet. Okay? The vast majority of these, and this was the kind of success rate I had, which isn't too far off from this. Now, this is obviously just a ridiculous. This isn't what you can expect. Really good results, and it translated into my actual trades. How did you actually place your trades? Do the analysis on TradingView? Yes, I do the analysis on TradingView, and that's what I'm going to show you is kind of how I use my custom outs and how they're marked up for ease and convenience for me. And then I execute on TradeAvate, and it's just because I'm using multiple accounts. I have to execute on TradeAvate. I can't do it on TradingView. I like TradingView for charting. So I'll get to you in a minute, Boyle. So what I'm trying to stress is the importance of doing this type of work, not just saying, okay, I'm looking for a market structure shift. And, that's good, but there's going to be nuances in here that are going to cause you to there's going to be stuff you hadn't seen and scenarios that you haven't been used to. And the back testing takes you through. I know is that I've been through enough of them, and I know in my personal self that it doesn't matter what I'm seeing, my hit rate is going to be good. Because in back testing, I've identified all these other criteria and what happens if this and what happens if that. So I can give you anything, beyond just showing you the steps. It's that you need to take time out of trading and get in back testing, go back in time, work yourself through it until this just becomes like robotic for you. You have the answers before the question. funded with a lot of capital. You're greedy, anticipate. Me to talk myself out um, the silver bullet trades never working, but you're probably going to fail. That was my first mistake psychologically because my back testing told me it doesn't matter what's the environment is when I see the criteria. So I didn't know that at the time. I had to go through that experience. So anyway, I let the silver bullet trade go out. It won big, and I'm like, I felt like I lost that money in my heart. It was the weirdest thing. And then I was mad, and then I was going to try to get it back. So once it started going back up, I was like, okay, now let's pretend there's equal highs here, but there's not. I said, okay, now I'm going to be right. And it was real important for me to be right, I guess. As it started going back up, I started adding to my position, adding to my position. I was going to make all that money that I just lost. I hadn't lost a dime. I watched the trade go away. I still went on tilt over it. Then I acted ridiculous, trying to go long, way up here, adding to my position. The time I was right here, I was in 5 or 6 contracts, and I needed that extra couple points, right? Because I'd either gotten behind or for whatever reason I was already down, took another trade, and in a bad situation. But this is the one trade that pretty much knocked me out. When I got up here, I was just mashing the button. I was mashing the buy button, click, 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 and it stopped. And I'm in 6 or 8 now, and it turned around, and it just dumped on me. My heart just sank. I felt it in the pit of my stomach, and it was falling so fast. I just hit the button. The next thing you know, I was down like $1,500 on top of what I was already down. So great experience. I used it to my advantage. It was a stepping stone to my eventual success. That's all I can say. Everybody told me it would happen. I said, no, not me. And so the market will humble you. I was humbled. I ate some crow. I had to go back and post on Reddit and explain, here's what happened. I made a video about it and I explained it to you guys. I don't know where you were, but that's pretty much what happened. So definitely get prepared for, be ready to accept losing before you get to that place. Win well, lose better. That's what I got out of that. I would have been able to just take a loss or even a miss, be okay with it. Everything would have been fine. I just could have, done my thing. But some issues I hadn't encountered yet, and going through that was a great experience. I'd rather go through that experience in my first year, take me 3 or 4 years to get to where I even have the opportunity to experience that. That would be, I'd want to get it over with. I've met the boogeyman, and I know how to deal with it next time. That's kind of my approach now. Okay, so depending on what time you get to the market, you're going to want to have a good idea of what your areas of liquidity are. And like Kraken was saying, if you go backwards in time a little bit, you see these points. Well, there's a whole lot of candles between that. That's uh, a higher time frame low right there because it's the lowest point from 707 931. So a couple hours went by. So that's a significant low. And you've got the same thing probably going this way. Something. There's another hour. So you just kind of get an idea, and it's going to be on the indicator, something like that, something like that. Okay, so coming into the market, I've got these levels drawn out. Just want to actually sit down and kind of start watching, seeing what's going on. I will trade the open sometimes. Um, Always watching it, and I'm looking for really, really, really clean opportunities, like this little 3 stab down. This was a good, I kind of recognize that as a pattern. I might have taken this one, but yesterday I think I remember what trades I took. Oh, I can look. Let me look real quick. Yesterday, Friday, took a loss at 9 o'clock. Prep. Oh, okay. Yeah. I had 3 minutes of prep, FOMO'd in on some week consolidation or something in here. It was at 9 o'clock. Yeah. I got in even earlier. It would have been 10 o'clock on Trade of 8 and Trading View are off by an hour for me, and I can't trade Trade of 8. I mean, I can't change it. It's stuck. It gives you local time. That's it. So anyway, if you're probably going to want to wait for the 10:30 or the 10 o'clock hour to start in the beginning. I wouldn't try to trade the open right away. Um, it does have some high probability and some good setups, but there's also a lot of fakes, a lot of Judah swings, a lot of volatility, and you don't want to get off to a bad start and lose your confidence. So if you wait until 10 o'clock, a lot of the volatility, a lot of the indecision has kind of went away. Liquidity is being built, and then you start looking for your moves. So at 10 o'clock, this level has been taken, and what I do is as soon as the level gets taken, I will look for the next level. I'll pull it down. That level gets taken. I'll pull it down again, right? And see how much of it wants to take. I mean, if it keeps coming down, you're still taking liquidity. You got to be careful because when it takes this liquidity, you got this all underneath it. You need to be aware of that. There's still draws of liquidity underneath you, and you need real strong signals in the other direction. By the time we got to this time, we would have stabbed down through all of this, and my thing would have been when the window opened, we were headed the other way. So we considered that the last punch through. And it's just all about you've got to just focus on meeting a few steps. You've got a little checklist in your mind. You go one, liquidity raid, bam. Our time frame, most definitely. That's the whole Asia. That took out the Asia lows. So number one is checked. Number two, displacement, break of structure. There's a little bit of subjectivity here, and I differ a little bit from ICT. And I say this all the time. His method will probably be higher probability, but with something with a high as a hit rate of this, I'm trying to get a bunch of trades. Rather trade, 10 times and lose three versus, I don't know, 6 times and lose. I don't know. I know what I want to say, but I can't figure it out. I said it earlier and it worked, but getting more trades for me is where the advantage is. So if I get 2 or 3 in a row and they're all winners, then it puts me in a different way to trade. I get a little bit more flexibility. If I only get one trade in a day, um, that's why I don't trade the 5 minutes so much. The 5 minute is a higher probability setup. If you get a 5 minute break of structure, it's more substantial, and those are great. But some days you don't get one, and I'm not willing to stay out of the market for the little higher probability when I can get, I'm hitting 70%, 74% of my trades here recently, and I think that's in line with where I was before. I think I was the other one. Um, 64%, but I was taking a bunch of other stuff too. I was taking a lot of ADR trades, some what do you call them? Yeah, ADRs. I was doing more IDR, DR then. Um, some days where I was guessing tops, and just this was less precise because this was before my blow up, and I got a lot more precise and a lot more mechanical after that. So that's why the bump, my win rate is better. If you have a decent win rate and you can take trades as long as you're sticking with the criteria. Just because you have a good win rate doesn't mean you slack on your criteria. And it's tempting to do that because you get on a roll, then you start rolling the dice a little bit. Like I'm way up, I could throw an extra. I could swing this a little bit and give it some extra room, and it's likely it's going to turn around. And our mind just does all kinds of crazy things. So it's really important to have this list somewhere and make this your roadmap. Don't deviate from it, because if you deviate, then you're going to feel bad, and you have a reason then to do things that aren't rational. Okay, so make sure I'm on the 1 minute. Yes. So the next thing I do is go and get an idea of what's going on higher time frames. And this is kind of all gummed up now because I've got these. Let me think these real quick. If that helps. Get rid of this DR box. Okay, so I can't back it up, all of these on my replay, but I will reference these. Let's say this is the beginning of the day and we're going into the market. I'm going to show you how I would use it to kind of look at the higher time frames. We know we've got liquidity that was just taken. Well, was that liquidity in a higher time frame PDA? Here we see it was. On the 4-hour, we're in a bullish fair value gap. Okay, so that's good. Here on the daily, tapping into a bullish fair value gap. I've gotten to the point where I need to see something under me, some sort of a bounce, along with that liquidity grab, to take the trade. It's not all the time, but I'm getting that's my goal. Is if I can be patient enough and disciplined enough, take enough, on the trades that I'm taking to where I can wait for that, odds go up substantially. And I've noticed that recently since I started doing it. It's like, and the confidence that you get, especially if you've got 3 or 4 of them, you're pulling back. You've been in a short, you're going short, short, short. Everything pulls back up into a fair value gap on all time frames. That's just an amazing trade. I mean, the ones I've taken here recently, like I said, I haven't been doing it real long. When they all crawl up into there and it lines up with OTE as well, the easiest trigger you're ever going to pull because you've got everything telling you it's going to turn around. If you just watch price, rarely are you going to see it just blow through every time frame's worth of PDAs. And the more you have in your favor, the more confluences you have, the better your odds are going to be. So part of it is you're not really relying on the bias to take the trade or the fair value gaps. What you're doing is you're building your confidence that you don't hesitate is a lot of it. I'm going to take the trade regardless. It might affect where I place my stop, having these levels, if I don't have to use the whole 5 points, if I recognize that a higher time frame PDA only needs 3 or 4 points, I might put it a tick or two above that and go with that. So being aware is just a benefit to you. Find a way to you can take one chart and you can divide it up into 5 pieces or 3 pieces, whichever time frames you feel work for you, depending on what's kind of how much real estate you got, and reference them. Be aware of where those levels line up with these PDAs. This is probably one of the most important things about trading that I'm seeing now. If we're applying these smart money concepts in ICT, is understanding these levels and these PDAs on higher time frames. Make your silver bullet trading less stressful and a lot cleaner because when you've got that support under you, you're not as fearful that you might be wrong because you've got extra things telling you you're most likely right, if that makes sense. Okay, so time frame analysis is important. As far as the structure, here's an example of, you've got this swing high right here. And just like Kraken said, this high is this low. So this would be considered like, a major swing point, more substantial than if there was a little swing down here. How about when you get opposing information from higher time frame setups? So I said before that the price action that you're in and overrule your environment. If you see the criteria you're getting, still going to take the trade if I have them above me or below me. But it's good to know, like if I have it below me, I know I'm taking the trade in the right place. If there's something above me, then I'm counting on the criteria having been a drawn liquidity already, that criteria will overrule effects of that fair value gap above me. Right? If I have one below me and I've got a draw, there's always going to be stuff above you. You're going to have to cut through stuff to make the trade. You might get some bounce back. Like this might have been a fair value gap right here. I don't know. order block. There could have been anything right here. This tapped on, caused it to reverse. I recognize that that's a potential. I will, when I see that, I'm going to pull a fib. I'm going to say, okay, here's just a typical retracement. I'm expecting it to at least draw below equilibrium. But if I was in a trade, let's just, for example, let's say, suppose I was in this trade, got up to here and turned around. I'm expecting at any point it to come back down here somewhere. That's just, I'm not going to cut the trade here because I know that it needs to come down here in order to get distribution. Exactly, analysis paralysis. So that's where your back testing comes in. If you'll, something you will want to mark for yourself, like on your back testing criteria, you're going to have a column for something to do with opposing PDAs. They're an opposing PDA. And if you have yes, 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 no, it's win, 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 win. In your mind, you've already put this to bed. There's no reason to hesitate because in all your back testing, you know that 85% of the time there can be opposing PDAs and you still win the trades. That's your edge. That helps you make that decision. No hesitation. You already did the work. You already know it's there. It can have an effect. Your trades still win. This overpowers that. That's why it's important to work that stuff through. Um, can't spend enough time doing that. You really can't. I mean, I don't know how to put it in different terms, like if you were a surgeon or whatever people do that are extreme professionals. They got a lot of time in the details, in the memorization, the studying. It has to be part of your makeup as a trader, or you're going to be handicapped, I think. So using the fib, I'm sure most of y'all know how the numbers work on the fib. I'll go ahead and cover that real quick because there's people in here that maybe don't. How this can be something you can use. Didn't really help, but so these levels are, I don't know who came up with them. The Fibonacci is actually a mathematician, and he identified that there were certain number sequences and patterns in nature, and I think others have put it into terms as far as human psychology or response to certain levels, things like that. That's where these come from. That's why it's named after the Fibonacci guy. These are a little bit off, but 61.8 or 62 is what I call it, with a real dominant level. And I guess what they found is that different things in nature and in humanity respect these levels when they're applied to different types of scenarios. So we're looking for what the market's going to do. We split it into discount and premium, take the leg that we're in. So once this started coming back, this would be the price leg from high to low. As soon as you get this pushed down and you've got a high, that's where you put your fib. And if it would have went up here, you'd put it up here. But as soon as it turns around, you've got your high point, you put it right there, and you take your lowest low. That's your price leg. You can tweak it around too. You could come up to a different swing low. There's different ways to do it. I think using the major leg that you're in and bypassing this stuff because this low to this high incorporated this move right here. So this to me is one price leg. Well, price turns around. There's no reason to cut the trade. There's no reason to worry. No reason to panic. You get down here, and this is a perfect example. I mean, this is an optimum trade entry. You're right at the end of 21%, one tick below. And am I right there? Get right to it. Yeah, just tick by it. So as soon as I see price turn around, I'm saying, okay, it should come down to here at the most. And I know my stop is down here, most likely, if I get into the swing. I have my stop up in here somewhere, I'd be concerned because I know the optimum trade entry is an area that would bypass my stop. So that's a good thing to have in your mind. Make sure your stop is below from trade entry. This really the 38 to, this is the equilibrium, and then from the 38 to the 21, this is sort of the optimum trade entry. So equilibrium, a lot of times you'll see it pop past equilibrium and turn right around. A lot of times it'll dig deeper. What I'll do sometimes is if I want to take a trade on this, I'll wait for the dip past here. I'll get in here, but I'll put my stop down here somewhere. I'm expecting it to turn around somewhere in this area. It helps you with nerves. It helps you with anxiety to put in your mind that I expect a retracement down to here. Otherwise, all of this is like, oh my God, oh no, oh it's going to go against me. It's not. You're in. You got your criteria. Your trade is solid. You've got good, analysis, back testing. Everything tells you this be a good winner. Don't let this take you out of the trade. I just did S&P. Yes, I have spent a little bit of time like with DR. I did try to look at the concepts like on oil and work. It's just a little different. It's got a different feel to it. And for me, since I'm in ES all the time, every day, I look at it for hours at a time. I'm able to sort of get an idea. I think, it kind of goes according to my plan. I know where it's going. I just don't know the path. Yes, I have FX replay. I'd love to do that. Do an actual, do like, oh, there's some good ones out there. T Trades did a good one on FX replay. In fact, I would recommend that. He uses an hour candle. He uses the 9 o'clock to 10 o'clock candle and goes through, I don't know how many weeks, he's really sharp. He would show you entries that I'm not ready to master yet, like with order blocks and breaker blocks and things. I basically do mine just on fair value gaps. You see my success rate. So be encouraged. I mean, the fair value gaps are huge. The OTE is a big part of it. These criteria are a big part of it. You can win a lot on fair value gaps, but you have the opportunity to get even better, more precise, a better win rate if you start putting order blocks, breaker blocks, mitigation blocks. I don't know so much about propulsion blocks. I mean, this would kind of be a propulsion block, order block into another order block, and then boom, um, that's, you know, um, consider that all a little bit next level. And the guys that do that and the ladies are definitely worth, talking to. I'm waiting for Yo Mama. Oh Mama. 1 second. 1 second. I second that. Okay, I got you, Jamie. We can definitely do that. I just got FX replay, so I need to work with that a little bit. I couldn't get it to. I was trying to use it for the DR back testing, and it wasn't giving me my times right. Every time I hear one of those terms in Kraken videos, I research them. Yeah, definitely. We've got the acronym list here. We've got the. Some of you may not know about the resources we got real quick for this stuff, so let me just take a quick pause here. Education, just in general, resources. Anything to do ICT, all the videos, here's the ICT abbreviations. But one thing you'll want to take advantage of is the ICD index. I'm sorry, that is good, but there's a better one right here. It's this one here. It's an AI driven thing. So let's say, what is a order block? Hopefully it doesn't say, I should have put an AN in there. An order block is a concept in trading that presents a change in the state of delivery in the market. It occurs when the market turns from a buy model to a sell model, vice versa. And I don't know if he's got links. There you go. Okay, so anything you want to know ICT, what is? Just start with what is. You get a topic you don't understand, come over here, ask it. It's going to give you an answer, and it's going to give you links to videos. And not only are you going to get a link, it looks like it takes you right into the timestamp because I don't know that I've ever been to this video. Wheel snipe Selly? No, I haven't. So, this is a great resource for questions and just, clarifying things, points, stuff like that, terminology, all of that. I definitely recommend you utilize that. And let me get back to Discord and questions. He has archive of all Twitter spaces. There's lots of sources of great information out there. Okay, so that's what the fib is. I pull mine like this so that I don't have to worry about flipping it long or short, right? Um, a lot of times when I first started, it's got this here at a 50 and the 0. Well, depending on which way I pull it, I would get confused. So I just created it to where I know the 38 is the 62, I know the 2950 is the 7050, and I know the 21 is the 79. I pull the fib one way, I just set it up, bam, I'm done, and I can use my equilibrium, my optimum trade entry on both sides. That was just a hack that gave me some time and a little bit of confusion. This is typing. Backtesting journal is sweet. Is that something that's shared? Yes. Actually made a YouTube video, and in the description is a link to the backtesting template. And I put little notes up here, and I go through the video and I explain everything about. I know that I think I took this out after I did the video. I can't remember, but if you go look for that video, it says here's my A plus setup with backtest template. I don't have that many videos, like 30 something, so it's it's in the last few months. If you flip through it, you'll see you'll have the journal or the backtesting thing and video that kind of shows you what to use, what to look for, things like that. I give away the journal too, which is this one here, my trade tracker journal. That I gave away in the announcements. It's up there pinned somewhere. You can get it, save it, and then you can edit it. And it's a living document. So if you ever lose it or you want the updated version, you can go back out and just download it again, save your information to a tab, copy and paste, make whatever little changes you need to, and keep moving on. Eventually, all this stuff is going to go in the playbook, and you'll have access to it all at your fingertips. Shannon and Cleric are going to help me kind of put this together. And the backtest template will be in there. The journal will be in there. Just a boatload of A to Z trader information, that you'll be able to use. I guess I'm pulling it up on my screen and you guys can't see it, but this was the playbook. There'll be a new trader, A to Z, all the DR, IDR stuff, CT, all your setups, the information that we have kind of filtered and feel like is what we would like to have from the beginning and not have to pour through everything. And then here's the backtest template, and the journal will go in here. So I've heard a little bit when Kraken was talking about the same trade you were showing now, but have a question. Are you taking this trade of mitigated imbalance? Or is this mainly that you take OTE? Not sure what you mean, Ovis. I was using an example here of just a retracement. It could be a retracement, it could be a trade too, because you retraced into OTE and then you could have took off. But 1 minute fair value gap. This one right here. Or I haven't really got to that point yet. I kind of sidestepped when I was talking about, what you do when you run into this, the subjectivity of what is a break of structure, what is displacement. 58. Yeah, so baby fair value gap right here, but no break of structure. I wouldn't have considered this valid yet because this didn't take out this. To me, that's not displacement either. I mean, it's nothing different than kind of what you got over here. You got some sizable candles over here. Placement, ICT says it'll look like an elephant falling into a kiddie pool, right? Everything just splashes out. It's a huge move. You see those, less often than I'd like to. When you see those are the ones that you're going to just get in, you're going to get your money and you're going to get out because it's such an easy trade based on the size of that displacement. Very rarely does it go up that fast, that high, and create a fair value gap. Sometimes it'll be a fake, it'll scream up there, but then it screams back and comes against you. Well, you wouldn't have to worry about that because you wouldn't have an entry. If you get the big push up and then a little blip candle up here, and a drop into it, there's a huge fair value gap. You just get in that and take it. If it's really energetic, if it's not really energetic, you might play with your entry a little bit, depending on how big the fair value gap is. But when it's really powerful, if it's going to come back, it's going to come back a little later. But for right now, it's going to make that big push, and then it's going to go up, and it might dip back. But by then, you might have already got your 5 points. So, right, so 10 o'clock comes. Here's a swing right here. Um, so here's the. I like to see the body close above swing. Okay, Kraken will take the. I think even ICT probably uses the wick, but you know what? I've been burned a lot using the wick. So my personal experience for me tells me I'm going to wait for the body close because I win most of the time. I have the body close. Even if there is a body close, if there's a huge wick on top and it comes down and just leaves a little of the body over, I'm getting really picky on these. Just from the back testing and from my experience, taking the losses, what works for me. And that's part of your development is to figure out what works for you. Kraken has what works for him. May not have failed on the exact same trades. We don't have the same experience using different information based on who's trading where and when and what instrument. But for me, trading what I trade, I want to see one big candle, displacement, that structure, no huge wick on the top, kind of a bullish, little bitty wick is okay, and another candle that takes off from there and creates, the fair value gap. I get that. I do well. And I start seeing these form. I've gotten into them thinking, that's just a wick or doesn't look right. And then I lose. It really puts that stamp of reinforcement on me that it doesn't have to happen a lot, but it's happened enough to where that's part of my criteria now. So I wouldn't have probably taken this. Trying to find the trade. I took a trade in here somewhere and I got burnt because I jumped in here at a few minutes before the market opened. And where was it? It might have been right here. I don't really see a swing getting broken. I don't know. I thought maybe it was Thursday morning. Anyway, um, so you can kind of take this either way. You can say this is displacement on a higher time frame, like on a 2 or 3 minute, one big candle. So let's play devil's advocate against my own theory here. It's a winning trade, but like I said, this is probably one I would have passed on. For you, this might make the criteria because in your back testing, you found that this works. So what I will do is as soon as there's a punch, I know liquidity has been taken. You see me do this. Mark where I need to see a break. It's just a little visual reminder. So I can kind of rest and relax while price is doing its thing. I realize that nothing happens for me until this line gets broken. This is the nearest swing point. If price was to consolidate right here and create another little swing point, I would move the line down to that swing point. And I love that when that happens. When it runs up or runs way down and then makes a big move, um, and comes back, then my stop is now a long way away. So I like it to kind of go back up again, consolidate, and give me a swing point that's closer to the bottom or the top. Usually happens. You just I talk about it all the time when it happens, and that's what I prefer to enter on. Here I've got my mark and just waiting. So right here, you get your break. It's small, but it's a break. So body close above, fair value gap created right here. Draw that out. You'll want to add one tick. In this case, it doesn't get you in. One tick will pay you, and you can lose a lot of trades, and that tick's never going to be not worth it. Trust me. You'll have trades run away from you where that one tick would have got you. If you're really going to put a limit order on your fair value gap, or really wait for it to tap, there's a lot of times when it just doesn't do it, and it's a banger trade. I mean, it's momentum, and that's why it doesn't come all the way back. So if you add that tick, you only need to win one trade at 5 handles, and that tick made you 20 ticks. Well, lose 20 trades, and that tick for that tick to matter, if you know what I mean. So that's my rule, and I think that's up here. Fair value gap +1. Yep, my rule set. Now you got your fair value gap here. You're waiting for back into that. Nothing really. No breaker, yeah, higher high, lower low, breaker here. Greg, I got one wrong yesterday, and I think he straightened me out. So you've got a lot of support here to count on you, especially when it trades through and trades back up. It does tap back into this and into this. So now when you're here with your swing, you've already done the math to know what you need for a stop loss down to this point here, because you're going to have to break this. The reason you do that is because if it's too far, you're really paying close attention to price action to try to figure out where's your first place. Because you're going to be hesitant. You're going to be hesitant. You're going to get up here. You're going to get in, and then you're going to be like, well, where do I put my stop now? So it's just dead time right here as it's working its way up here. It's just dead time. So be calculating. Use that time. You're not interested in anything that happens unless the new low is created, a new swing, something like that. Be analyzing candle by candle analysis. That's what I say all the time. Every candle matters. There's something, it's telling you a story, and you need to be able to reading it and keeping up with the narrative so that when it's time to turn the page, you're right there and ready to go. So from here, I'll use this one, I guess. That's a pretty substantial stop if I had to go from the swing, but luckily, and the fair value gap doesn't give me much more if I was to enter right there. You know what? Go stats, back stats. Oh, that helps. Drag it over here somewhere. Okay, so our entry. It's too much, right? So you got a choice. You don't have much of a fair value gap to work with. Get rid of this box because that was throwing me off. So you have this swing point right here, right? How do you get under a swing by a tick or two? Use, if you've got 5 points to use, where that puts you. Okay, 475 right there. I'll go 5.25. I don't mind. I want 2 ticks beneath this. Sometimes that will make the difference, right? In this case, with a 5-point, looks like we would have got stopped out. Yeah. Probably so. So again, for me, this isn't strong criteria. This is a trade I would have passed on. And after looking at what my acceptable risk would have been, I probably would have tried to get under that swing with 5 points and run with it, and I would have got stopped out. Boy, you crazy, man. Boyle said he'd do a 12 gun and that would work. Yeah. I think I already told, I said it in the previous stream that I got into trade yesterday and I got my signals crossed on some information from ICT. He was talking about a 12 handle stop and a 10-point take profit. And I applied that to ES when they were trading on NQ. So I was using way more than I needed to. So now I've got the nickname 12 gun. But I left it up there. I mean, I threw it up there and I let it ride. So that was funny. Right. So again, this would have been a loss, but it wouldn't have been a trade I would have taken. And it doesn't really validate what I'm saying. In this instance, it's just this is what happens sometimes to me that makes me reject this pattern right here and these criteria being met. Once you're out, then it's once it starts running up, you got your upper levels up here now too, and that's substantial. That's a high from o'clock one day to 3 o'clock the previous. So 4 hour high, all of that. Um, straighten this all out. Comes back up here again. Now, while this is going on, we don't really have interest in anything. We got stopped out here. Now we're either needs to come back down here and dip again, and you rinse and repeat. Then you would look for another process to go long. If it came all the way back down here, took out the previous liquidity. If you're bold, you could assume that this was a OTE retracement for a continuation, but then you're not really sticking to your rules. So decide if that's going to be like a an A B kind of thing. This is my A entry. This would be my B entry. You can incorporate stuff. Just make sure it's part of your rule set, so you're not deciding at the last minute because you got stopped out here. You're going to take this. That becomes impulsive, seat of the pants trading that wasn't part of your plan until you lost. So don't do that. So we see price do what we expect. Comes up here, takes this liquidity, taps through this, and we get some consolidation. That's consolidation. Waiting for the move back down once we pass this. So, I'm not. There is a way to take these trades in the trends and stuff, but that's another video. Good to have one for both ways. For a reversal and a continuation. We'll make that a different video. So we're still waiting for shorts. We passed our level here, so now we're just looking for a market structure shift. Once we get across this, we start looking for swing points the other way. So we do the same thing. This is over this, back down. Oh, here's a point. Here's a point. As it's consolidating, new points are being created all the time. Comes up. So right here, it's a 3 candle pattern that breaks the structure. But that for me, that's not displacement, and there's no fair value gaps. So there's nothing you can do there. Then we rip back up again, come up. Now we move our swings. I'm going to use this swing. Kraken would probably use this swing here. Nothing wrong with either. ICT gives examples of this being the silver bullet break of structure that he calls 2022, pattern. So it's your personal preference. Go through and back test, do 100 of them, 100 of these, 100 of these, and see what your odds are, what your percentages are, or 50, something like that. But do a substantial amount so that in your own mind, this works or this works better, and then pick. Use whichever one works best. This worked. The reason I want this one is because I want the room. The criteria, if they're met, most of the time, the difference between this and this probability wise isn't huge. But I want to get in early because I want my stop up here. Get in here, still expect it to retrace, maybe all the way, up into here somewhere in the OTE or whatever. And it's just not as comfortable for me. Doesn't fit my personality and the style of trading I do. I want to get a tight stop up here above the swing 95% of the time if I can. If it's just a ridiculous difference between where I need to be and where I want to be, then I got to compromise somewhere. But I'm always shooting for this, and this gives me the best chance. Closer to the swing as possible. So we've got multiple fair value gaps. On the downside. Again, I like to see the one big bullish candle, but if they're all candles in continuation, if you go to another time frame, oh, okay. You've got a break of structure here, this single candle here. It was two big candles that came down, would be enough for me. I don't need to switch to know that. So if I see that, in my mind, I'm thinking, okay, I know that is a break of structure on a higher time frame. I'll use it. Um, but I'm going to show you in a video before we end this what ideally I want to see. So break of structure, fair value gap. Here's your retest, and then you can see how it just pretty much goes your way. Our short tool here. What's our stop going to be? Going to add a tick to the fair value gap. Factor that in. I'll go 550. Um, even go 575. Like I play with that 5 to 6 points. If it makes the difference, you get the 2 ticks. I'll generally fade that. But 7, 8, once it's above 6, then I just can't do it. I would have to use these other fair value gaps for support. Try to get a couple ticks above one of the candles that created one of the fair value gaps, something like that. Ideally for me, right there is where I want to be. And what you should be doing is, if you're targeting your 5 points, is here's your partial. When you get down to here, you're going to take a partial. If you and it's a pretty good spot because you have a swing right here, so that's liquidity. It's not a bad spot for a partial. Sometimes if I'm on something like that, I will bring it up 1 or 2 to make sure I get it, because sometimes it will come right there and it'll turn around, and next thing you know, you're a point negative and then a point and a half, and it throws you out of your game a little bit. So give it a couple extra ticks here. I add an extra tick here. It's a game of inches as far as I'm concerned, and those inches for me pay off substantially. Then you would target your lower levels of liquidity. I'm always looking for this. I mean, in my mind, these are the moves I always want to be prepared to catch, in a position to catch, ready to take advantage of. So we're going to look at this as a level, and when it gets down to here, or 2 up, I'll have my stop dragging behind me a little bit, and I want to see what it does here. If it just keeps pushing through, then we just keep trailing the stop, and you get as much of this money as you can. For eventually, the farther you go down, the tighter you are, unless you really have a strong conviction that there's a drawn liquidity it's pulling to. And sometimes you'll get that and you'll be right, and it's a great feeling. So pretty mechanical. You probably also had some inversion fair value gap in here as well, acting in this area. So that's why you get all this mess. Try to put my stop a tick away from the first candle of the fair value. Yes. So that's kind of what Kraken does too. So if you're looking at a 3 candle pattern, if this is the first one, it would be like right up here somewhere. And that's, again, you'll lose less when you lose. A lot of times for me, I've had it come up to, a tick or 2 under here, and I'm willing to play with that extra room in order to win those trades also. So it's just your style of trading is going to determine how you do this. Neither is wrong. You're usually looking at the difference between higher probability and more trades. And again, if you're doing well and you've got a good hit rate, and your higher win rate will kind of even that difference out, and it's just your comfort level. If you come out the same in the end, what feels best is the best way to put that. And for me, that's less anxiety, more wins, in my mind. But then if I do lose, I'm going to lose a little bit more. So you got to make sure it's balancing out in your favor like that. And you'll know that from your journal, know that from your back testing. If you don't know all of that, then you're trading blind. That's just the way it is. You need to go into the market knowing why you're doing what you're doing. You've got a reason why you're putting it here versus here. You've established for yourself in your own mind what works and what's give you the most confidence. That's what makes it your model, your setup, your bread and butter, whatever term you want to use for it. Your personal pucker factor. Exactly. Good way to put it. So, all right. So pretty easy win there. I'm gonna try to get through these next couple here real quick. Um, let's see. So we were up here. We come down here. Um, good enough draw on liquidity. I mean, this is here at 1041, 1156. That's an hour candle that was taken. And hour candles or T Trades uses that for his example. He uses an hour candle. If it breaks the low of the hour candle, he starts looking for a reversal. So we get in here, consolidation, building liquidity, get this big move right here. This is nice. This is nice displacement, nice and clean. Breaks this swing. Again, if you're Kraken's model would need a more substantial swing. He'd be looking for this to break. He'd get it because he would take these candles as his. He'll take a wick, so he'll definitely take these three. So we would both hit on this one. Um, and same thing. You draw your fair value gap out, or hopefully you've already got an indicator that does that for you, save you some time. Add a tick, and I'm gonna wait. It's back. Can I get for a stop? That 50 again. It just I've identified through all those numbers that I had that 5 is a good range, between 5 to 6. I also found that a lot of times it doesn't need but 2 or 3. So if I can only give it 2 or 3 and find a level that's substantial, sometimes I'll do that too. If I'm questioning the move a little bit, maybe a lot of consolidation before the dip. Even though I'm allowing 5, I know that there's a really good chance if you have this energy and this momentum, it'll never see half of that, and that's a nice feeling. So then we take this one up. You're partial at 5. Try to see if it lines up with a level. It does, right? You got this level of liquidity right here. We expect that to get punched through. So level of liquidity here, partial, and we're aiming for up here, next level, trailing our stop. So right in here, we get stopped out. We took a partial, and we got several points worth of our second contract also. So that's a good score. Can you show why you took the trade late Friday before the market? Yeah, I made a video about it. Everybody wants to see that trade. You're not in the, oh, you weren't in the stream, were you? Well, I made a whole video on it, and I went through and I actually showed the live stream. I made a chart markup for it. I want to hold everybody here that's got other stuff to do. I'm going to try to wrap this up here in the next 19 minutes. We'll make it an hour and a half together. So we take this win up here. I'm always, now we're in lunch. I wouldn't be trading any of this. Well, I might start now because this hit big, hit really nice right here. Here was your break structure, value gap, tapped right up into it, and then just dumped. So, say lunch is bad, and a lot of times it is, but again, I will, if I don't have nothing else to do, I'll watch the market because I believe there's always opportunities to make money. And with a couple different little entry models or something, you can take advantage of consolidation. Moves in and out of consolidation. We've got fake breakouts, stuff like that. So money to be made all day. It's just lunchtime is known for some certain characteristics. But here would have been a huge winner. So then we come back in and we're in the afternoon. Say we get here at, I usually say 2:00. 4 is my time. I would redo the whole thing. This instance, I would have had this liquidity down here mapped out. And I would wait to see, what happens when it rips through there. So wouldn't have taken this There's no, this doesn't break a single swing. So for me, this is a no trade. Goes back down, dips again. Nothing there. No fair value gaps. Nothing. Back down, punches down again. Back up. And displacement. This is it right here. This is displacement. This is your go move right here. This is money. Um, break of all structure, right? Broke that structure, broke that structure, broke that structure. This is telling you the market's on its way. If it's a fake, it's going to turn right around and come back down. And when it is a fake, generally it just comes right back around and rips against you, sort of like, well, I don't see any good examples. But from what I've noticed is if this candle isn't going to make a fair value gap, I'm not going to have an entry anyway, and I won't get in. But if it does leave a fair value gap, I'm getting in, regardless of how far it comes back. So that's part of the see trade, take trade, the fair value gap. I've tested them and done the comparisons on a 1 tick fair value gap, a 1 minute or a 2 tick fair value gap. 1 and 2 tick fair value gaps, believe it or not, they win. It's when you start getting into the bigger fair value gaps, you start running into problems, over 5 points or so. They act more like voids, and price wants to trade back through it. So there's a 30-second trade there long. Oh, yeah, I don't doubt it. Now that I kind of see that 30-second stuff going on, there's probably tons of them. uh, yeah, it would have been, hourly stab through. Probably saying that there was a 30-second block off to the left. Yes, here somewhere. Block. That's part of your development. I'm just now finding these little 30-second entries and being able to add these other blocks in it. If I've already got a good win rate and I can make it better, all I can do is make my trading easier. It's just going to get better. So that's kind of the overall goal. But, you got the huge push, you got the fair value gap, up here. Here's where you got to decide what to do. It's the subjectivity. And different approaches. So always going to look at where my 5 points will take me. I did that. I could get below the consequent encroachment just barely of this fair value gap right here. And that would have to do. I mean, if I want to take this, I would take this fair value gap here because this move was so energetic that I don't expect it to come back down. This would have been 2 candles and a little stop and then a push. And it's more relaxed, and I might expect it to take longer to get up here. But this move tells me we're in a hurry, and that's just something from experience that you just get that from doing it over and over. You'll know how to play that. You can play it a couple different ways. Try to get under the consequent encroachment. It doesn't make sense for me to add 950 to get down to there, and there's no difference between uh, this and this. I mean, I get below the consequent encroachment, the tick or two. That needs to be it. I just have to satisfy myself, and maybe I look at it and I'm like, I'm gonna pass. I don't feel good with that. Here's where you're going to hesitate because it's no man's land. You haven't been here before. So, if you're not sure, it's better to err on the side of caution and just say, I'm just going to wait for the next one. Not a big deal. So Greg mapped one out for us here. Oh yeah, from way back. Okay. Yeah, that's on the 30-second. When you saw that punch up, if you had your levels drawn out, you could have got in on that. That's just what experience will do for you, right? Greg would have took that trade, as I may not have. But I want to get to the point where I can. So he's talking about right in here. Go to draw that out. Wait, here somewhere. Candle maybe dip down. This would be 2 candles on the 30-second. So, and there you go. You're off to the races. You come way up here. You don't need to wait for the total amount of liquidity to be taken. If you're getting session liquidity, like these might be lunchtime highs we're taking out. from. And that's what the Kraken indicator is going to have on it too. It's going to have some stuff where you can kind of see different levels that are available. Those are usable. You don't need to wait for external liquidity so much. Then at the end of the day yesterday, I took a trade in here on the 32nd. I don't think it even presented itself unless you did like inversion fair value gap here. Kraken was saying he could have took that up in there, but that's a little bit still beyond me and probably you guys too. If we're just looking for fair value gaps, this happens. It sucks. Um, it's your nice break of structure. You get your huge fair value gap, and the price just runs away. And it stops, consolidates and dips again, and you never get a fair value gap entry until you're down here. The problem is if you take your fib, you run it from high of the leg to the low of the leg, and you look for discount and premium, 50% line. In order to go short, you've got to be up here somewhere. You can't take this short here. You can, your odds go down, and it's just that's to be part of your rules. I think I have discount premium on there, but it's sort of just by nature that I do that. So yeah, took it. Was going to tell you about it, but you were flying high at the time. Yeah, I was 12 gunning it at that time with my stop loss up here somewhere. Yeah, if you haven't watched that video, the trade starts in at an hour and 22 minutes. Go watch it. It's a hoot because they tell me in the middle of the trade that I've got NQ and ES mixed up with my stop $240 ahead of me. And I was like, I brought it down. And I was like, you know what? No, I'm just leave it there. It felt really good up there, and I was already in it to win it. And they were telling me to take profit down here, and I had my target way down here somewhere. I had my target right in here, a couple ticks above. And I was like, nope, not taking profit. I took a partial, but I just stayed in and just rode it. It was a great trade. So real quick, I'm going to show you a live trade of my silver bullets. Kind of show you what the price action looks like live. Maybe a month ago. That feels about right. Isn't the one I want. A better idea. Well, but that wasn't it. That was the weeks ago. No, it wasn't 2 weeks ago. Why does it seem like it wasn't in the light screen? It was a dark screen video. Don't look like they're in the right order to me for some reason. Just did that one. It was a month ago. Wasn't it? This isn't it either. Okay, well, there was. I wish I had it. It showed a really powerful move. The displacement was obvious. Let me look at one other thing real quick. I think I might have put it on Facebook as well. I'll put a ton on here so it wouldn't be back very far. That was some date here, August 2nd. That's not it. Well, maybe I'll make a link to it when I find it. Really great video. I thought for the example that it showed of um, live speed, the displacement, everything, it all came together really well. So I should have had that set aside. Now all the way back into some DR stuff. So, all right, well, there's good if you see the live recaps where I go back in, you can see silver bullet entries and stuff. I've got a lot of them that are live. But, oh, it's nice seeing them live. You can see the chart markups and everything, and people explaining it. But I think for myself, it's beneficial to see it play out and see kind of the nitty gritty, how that can draw on your emotions. Just that tick up and down, back and forth, comes against you, goes. When you just see the chart, it's missing the emotion. It's missing all the character, of what's going on. So, um, kind of can to see what it feels like when it comes down to within a tick. You don't get that same feeling looking at the chart. You see that it's down there, but you didn't have to that was grueling down towards you and you're holding your breath, trying to hope this move runs, and it doesn't, or if it does, like I said, there's a lot of emotion involved. So I was trying to hope to be some of that curiously, I guess. Anybody got any other questions? We went an hour and a half, so I wanted to get more through the charts. But it's just there's so much information. um, Back to placing a trade on a 1 minute time frame, wouldn't it be kind of a rush job and miss the correct entry for trade when switching between platforms? Um, Not really, because these are synced up. I've got the trading view screen open over here on the 1 minute chart already, and I'm watching it right along with my trading view stuff. I usually have this window expanded nicely, since I've got all my higher time frame stuff over here on trading view. I'll have this one expanded. I'm just ready with either a limit order or just hit buy market, and I'm in. And all I do is then I just go back over to trading view, switch to MES, and then those orders show up on my trading view. I'd like to move from backtest to demo, but I'm worried about this aspect. Rush job and miss the correct entry for trade when switching between platforms. The 1 minute is a little bit faster, and if you can use the 5 minute, it wouldn't be a terrible idea to start with the 5 minute. You're going to get less trades, but it's the same criteria play out on the 5 minute as they do on the 1 minute. You look for the break of structure, you look for your fair value gap, for your liquidity purge, wait for your retest, and you go. So you can start with the 5 minute. Nexus Blast trades the 5 minute. He's got videos. Like I said, I'm there's days you just won't get a trade, and hard on me because I have such a small amount of time to begin with. Try to get used to incorporating the Fibonacci. Start pulling it from leg to leg, at your equilibrium. Expect the price to come through it. Dip down into that. The OTE stands for optimum trade entry, and that's just a term ICT coined, I guess. If you do 1,000 of these retracements, a very high percentage of them are going to come into that OTE and they're going to reverse. And if you watch it, it does, because it needs to come against people who went long, short them out, so that it can then go long without them. It needs their orders. It wants to buy their orders and buy them up so that it can move and carry the market. That's why you get those deep retracements. And once I started expecting those retracements, it changed my trading. I mean, level of peace I have now is ridiculous compared to that, because once it started, I didn't know where it was going to stop. And now I don't even get concerned until it's down here somewhere. All this means nothing to me. It's nothing. It needs to happen. The market has to do this. And you've got to be willing to accept the fact that you can get in drawdown. You can, it's the hardest is when it's going against you. And that happens. But you've still got this optimum trade entry in your mind as perfectly normal for the market to come right here and turn around. It doesn't mean anything. I don't have to worry about nothing. Relax. The demo, the sooner the better. Yeah. Get your process down, get your rules down, get mechanical, get into the market. Either paper trade, play with some micros, get an eval. Spend $30 on an eval account. $30. You got a month. Play in the market. Feels like real money. You did invest some real money, $40, but you're not going to lose hundreds or thousands of dollars. You can test yourself, and you can see how well your information and your experience translates from the paper trading and the demo trading into the live market. You're able to execute eval, right? That's your next step. If you do that, you can't do it until you can. $40 a month is not a substantial investment, depending on where you live. I got to be careful. I know there's some people that are dealing with some serious inflation type situations in their countries. So if you're blessed to have that, then you can take advantage of it that way. Apex evals, when they're on sale, 80% off, they're $37, I think. They give you a 90% off, you can get them for $18, a 50K. Right now, until the 27th, they're going for $37. That's what I've got right here. These are all 50Ks that I got on the 80% sale. I got 10 of them. Yeah, for sure. That's one of the things we try to put people in the right direction on. It's a tool I didn't know that was available until I was already a year into this, pretty much. So definitely something to look into. Anybody else? Anything I need to cover? I'm here if there's anything else anybody wants to go over. I just know everybody doesn't want to hang out here all day on a Saturday. So you've got some more stuff. You've got more questions. Let's knock them out. I use the Trade plan. I like the trade copier. But it's not available yet. We're compiling information and kind of got put on a back burner. It was something I was real gung ho at when I first started because we were building the resource and the tools channel, and there was just so much stuff in there that was organized, and it's getting longer and longer and longer and harder to find the stuff that's pertinent. I want to get it into a Google sheet, and everything is on the page in categories listed, numbers, subtitles. And when someone asks a question, I want 9 people to say, "Oh yeah, it's on the third tab, number 3," or something like that. That way, we're all looking at the same information. It's just going to be packed full of everything you need from beginning to the level we can push it up to. So I started with Trade because I went through a trade day challenge. I went through trade day the first time, and Trade was their package, and I just didn't know any different. So I used it and I learned it, and I made a tutorial video on it, and I liked some features in it. It's pretty basic, but it's got some packed features for things you can add. Got a performance tab. It will tell you, give you all your metrics. You can go back different days. Like, say I forgot what my trades were yesterday. I can punch in yesterday back to 922, hit go. It's going to tell me I had 3 trades, 2 winners. My total P&L was $201 on this account. But as you can see, it was times 10. It gives you, it'll tell you what time of day you did good. Time of day with enough trades. If I go back like a month, I can see, oh, Asia, I suck. Don't trade Asia, right? There you hear at 7, 8, or later in the night. It's a really cool feature. So I like that. I like having the, all of this stuff here. Bracket orders are killer. The bracket orders are amazing on here. You can configure these things. You can go where I can set an order. It's programmed ahead of time. It's already configured that if I went short right here, that first green line, my stop. Then below me, there's 2 green lines. That's my partial and my take profit. As soon as I hit sell right here, all 3 of those orders are put in. Automatically, it's going to go to break even at 3 points for me. I don't have to do anything. Take my partial and then maybe slide my target. Really, really cool. You can set up multiple orders. You can add as many orders as you want that do different things, depending on like what kind of stop you want to use. These are just normal take profit and stop loss. But if you go in here and click stop loss type, and you've got auto break even plus auto trail, auto break even, trail stop limit, trail stop. It's just incredible what you can do, especially if you're working with micros and you've got, you want to take several partials, you want different criteria on things, you can program all of that. It works really good. I did a tutorial video on that. It explains how to do that and set it up. And then I show you in live trading, maybe in demo trading, but it looks like the live market, but it shows it triggering my order. Everything's automatic. I'm just sitting back, hands off, and it's really convenient. It just doesn't work with multiple accounts. That's the only bad thing. So I have to turn that off when I'm trading all of these. See, futures is typing, so we'll give him a minute. You manage the trailing drawdown. Does it make you cut trades early? Not really, because at first I was doing this with just a mini or 2 minis, putting on a lot of risk, and I had some really good days, and I had some days that were kind of a gut punch, but I'd come back the next day and get a base hit and kind of build my confidence back up. And I was able to overcome that. But then I sized down, and now that I'm taking partials and only looking for 5 points, kind of trading you do with the silver bullet, you're not doing a lot of like DR. They might let it run. They're trying to hit like a 2 standard deviation target, which could be 15, 20 points up there. They're willing to let it come back to break even. I mean, they set their stuff at break even. When I was in the academy, never saw M7 a partial. I never saw him, raise that stop. It was break even or bust. You can't really do that. I mean, not with a trailing drawdown, because if it goes into profit $500 and comes back to break even. So here's where it matters. This is the only number that matters right here. $50,000 account. I've made a little over 1,000 on each account. This number I need to keep at 2,500, because when this goes down to 0, I'm done, and it doesn't matter what this says. This could be at 52.5, it could be at 52.9. I could be $100 away from passing the challenge, and I could still run out of drawdown by letting orders run way up into profit and then coming back against me. If it goes up 500, comes back 500, it goes down to 2,000, even though this stays the same. Right? It went up in profit and came right back down to break even. This number won't change. I'll lose $500 on this number. Okay, Greg, thanks for everything. That's kind of how the trailing drawdown. I look at this more than I do this. If I keep this at 2,500 or in that range, I like to keep it above 2,000. It gives me 2 trades at 5 handles that I can lose in a row before I get below 2,000. And if I lose 2 trades in a row, it's usually not 2 5-handle trades because pretty good at, if you can see here, 5-handle trade with 4 micros is $1,000. So usually able to get out at 650, not taking the full fives. I can take a few trades that I can lose. I'm still at a comfortable place for my drawdown. It is different than like trade day where you have an end of day drawdown where this number doesn't change. It doesn't um, register until the end of the day. And it doesn't matter if it went up for you and against you during the day. It's going to look at what your profit loss was at the end of the day, and it's going to subtract that from your drawdown. Does the drawdown ever reset? Well, if you run out, it'll reset. You can either pay to have it reset, which I think there it's 80 or $100 for a reset, but they're always running a half off. So or you can just wait till the next subscription day for your month and pay your $40 again, or you pass it and they reset it, but then you're in a funded account. Then it's real money. If you make it, it's yours. So, and all I want to do, honestly, the way I trade like I do is because I want to keep this same pace. This pace right here that I'm doing doesn't look like a lot. It's $11,000 a month with accounts, and I plan to go to 20 again. Just with 10,000 or 10 accounts, pace I'm on right here, my daily goal for actual days in a month that I can trade. That's 4 micros, 5 handles is all I need to get $1,000, right? I don't need to make anymore. I can quit my job on this. There's no rush. This is a very relaxed pace for me. I don't even trade every day. And if I have a day I didn't trade, make it a 0 so that my actual factors in days that I didn't trade. Here's where my average comes from over here because it's hard to average when I have individual trades here. So I go take like the day and I get my total. I put it over here for each day, and then I get this average right here. It should be 1244.60. Which rounds to 1245. So not cheating myself by saying, well, I want to look like I have a better daily average than I do. If I take a day off, that goes against my actual daily because in the real world, in my real life, if I take a day off, I still need to make X amount of dollars. So got to make $30,000 to pass. If I give myself 2 months, I got to make $15,000 a month, pass this challenge in 2 months. So this pace will get me there. And I just keep doing what I'm doing. I don't change anything. You can approach these challenges just to pass them in a few days or a week. Then what do? What strategy did you use that you're going to continue to use? It's good risk management, good discipline, good patience. It's going to sustain you in the long run. Or did you look up on a bunch of stuff and now you're worried because, now it's real money and you really weren't that confident in what you did in the first place. I've been through that, and that's why I do this way now. I passed my first one in a few days and all happy-go-lucky and, thought I did something and realized that, there's more to it than that. Anybody else? Your chance. Questions about anything. Get as much as get until you ain't got nothing, and then I'm gonna go. That's it. Oh, your mama. Good deal. And yeah, so I've got a couple ideas for streams. Somebody mentioned something about which one was it? Somebody said another video to do that in that Ovis or and what was that? Anyway, we'll try to keep the content coming and If you got ideas for videos or something you want to see, shoot me a DM and I'll try to maybe put 2 or 3 of them together, incorporate it into one thing. You know, several concepts into one session. Um, Saturdays I pretty much devoted to this. So after the 22 mentorship, I'm going to try to find something to do for you guys. So maybe we do some back testing. Oh, that's what it was. Back testing FX replay. Go through and do some back testing. You can't do enough of that. It's just going to build your confidence and you make the good decisions when it's time to make them. And then there's not a whole lot that's more important. Hey, yep. You guys have a great day. Back, Kuga.